More Americans are now recognizing the growing China threat, something we've been talking about for years. A new survey by Beacon Research shows more than half of Americans see China as the number one threat to the United States. This, as 37% list East Asia as to where they believe the United States should focus military forces. 37%. Time for the word on Wall Street. Top investors watching your money. Joining me right now is Laffer Tengler Investments Chief Investment Officer Nancy Tengler is here this morning. Capital Wealth Planning Chief Investment Officer Kevin Simpson is here, and Walser Wealth Management President Rebecca Walser. Great to see everybody this morning. Thank you so much for being here, Rebecca. Kicking things off with you with this pretty good rally underway, up 310 points on the Dow Industrials, despite Fed Chair Jay Powell's testimony yesterday in front of the Senate Banking Committee. He said we should retire the word transitory, set the groundwork for a faster taper. Listen to this. I want to get your reaction. Watch.
The economy is very strong and inflationary pressures are high, and it is therefore appropriate, in my view, to consider wrapping up the taper of our asset purchases, which we actually announced at the November meeting, perhaps a few months sooner.
Rebecca, your thoughts on what you heard yesterday from the chairman?
Yes, Maria. I don't know why he ever used transitory in the beginning, other obviously to settle the markets. But, you never know it's something is transitory until it's not transitory and it lasts a while. And so we knew that they were going to taper. They had announced $15 billion a month from the 120 of purchases that they make on a monthly basis since the coronavirus went into effect. And, that was going to take through June. And now, obviously, with it going a little bit faster, the markets got spooked. So it's a spooked reaction. And anytime we have a reaction like that, we always expect the next day, if it's truly just, a reaction to an immediate statement, the markets usually recover, as we saw on Monday from Black Friday's announcement of the new variant. So this is a reaction. But, Maria, when you have personal consumption year over year of 4.1%, and when you have core CPI, which doesn't even include energy and food, and I think the government uses that core CPI number to trick a lot of Americans because they think, well, 5+%, it's not the end of the world. But that doesn't take into account the energy prices, 30+% in some cases, food 20 to 30+%. My turkey cost me almost $80 this year. I mean, it's a great thing I got one from Whole Foods, thank God. But inflation is real, and to have the head of the Fed say anything other than that, Americans start to distrust that as an institution, and that is why he had to come out and say, let's acknowledge this is really happening, and we need to do something about it. And it really puts into question, Maria, MMT, modern monetary theory, which says you can spend as much as you can forever and there's no impact as long as you can service the debt. And I think we see that that is not the case. And so I don't believe in MMT, and I hope that people are seeing that.
Well, I don't know why the Democrats are still pushing a $5 trillion spending package right now that will include much higher taxes. I was just struck when Powell said it's time to retire the word transitory, Rebecca. There you have it, in your face. Inflation is here.
Amen.
Deal with it. And
Amen.
What can they do, though, about this? It's zapping people's disposable income.
Well, I mean, we have to obviously taper. I mean, 120 billion a month of support, 1.3 trillion a year obviously has an impact. But the Federal Reserve and central banking policies globally obviously have a control on the monetary supply. And Congress has got to understand we just spent $8 trillion in this country alone, 25 trillion globally. We have got to taper down, and that means spending in Congress, too. So I hope this kills this next deal, because we have already passed so much stimulus and so much infrastructure, whatever you want to call it. It's not really that. And so let's get a clue in Congress. Let's wake up and let's say, stop.
Well, I mean, Rebecca, let's face it, 4.4 million people dropped out of the workforce in the month of September because they were getting all of these free checks, free money. It's just incredible the impact that all of this money has had. Meanwhile, Kevin, we had that broad market sell-off. Yep, go ahead. Final word. Go ahead, Rebecca.
I was just going to say, people aren't going back to work either, Maria. This is the hardest job market to hire people in the history of time. So it is impacting everything. We've got to get our economy going again and not act like we're trying to make it fail.
Somebody mentioned to me the other day that insurance is another area where you see real inflation. All the insurance companies are raising rates as well. That's like a hidden cost for people. But Kevin, I want to get your take on this market. We had a broad market sell-off yesterday, but one stock actually bucked the trend, and that was Apple. It traded up much of the day, finished higher, even with the sector being hit by fears of this new COVID variant. Apple shares extending the gains this morning, up another 3%. What do you make of this? Do you want to be buying Apple at this price?
Well, Maria, luckily we've had Apple in the portfolio for a number of years, and happy for sure to see it increasing yesterday in light of a massive sell-off. I think from a buying perspective, however, you want to look for opportunities. I don't think this is a back the truck up, warning red flashing, buy everything dip. But when you see these pullbacks, I think technology names are a wonderful opportunity to add to. When Apple's up, maybe you look at Microsoft, maybe you look at Amazon, Alphabet. As we see these pullbacks, we're buying the dips. Retail investors are buying the dips. And we're going to continue to see uncertainty. The Omicron has thrown an X factor into this market. To Rebecca's point, there's a lot of really good, strong things on the economic side of things. But when we have uncertainty, we're going to have continued volatility. Unfortunately, we're going to have continued volatility into the holidays. But I think the tech names certainly are opportunities, and adding to those positions, not day trading or swing trading, is going to be a great way to play this volatility over the next few weeks as we learn more and the science tells us more about the new variant.
Well, obviously, this is where the leadership has been, and we're seeing that again this morning. Nancy, this market is up. Futures indicating another triple-digit move at the start of trading. We are kicking off a new month, December 1, as we await the jobs report. That'll be out on Friday. Estimates call for the economy to have added 550,000 jobs for the month of November. Nancy, your thoughts on the macro story here, as well as allocating money in this market where the volatility is really rising?
Yeah, I think, well, first of all, I think you have to buy protection against the volatility, Maria. We bought calls on the VIX, which we just sold at 100% premium, but we also have puts on the SPY. And what we're trying to do for our clients is ensure that they can be exposed to the market, but not have taxable activity every time we want to be a little bit more defensive. But as you know, we're long technology. I agree with Kevin. I think it fits into the jobs report as well. These companies can expand, growing margins and growing revenues and earnings with fewer employees. So look to software where we had real CapEx spending of 16.5% last month versus the hardware sector, which was up about 6.1. So real after tax. This is the place where you want to be, the pipes and the bones of the infrastructure, of the cloud. This is where you want to be focused, we think, for the next 3 to 5 years.
But Nancy, are the valuations okay to get in now?
Yeah, I do think so, Maria. I mean, if you look at these companies, they're generating high double-digit growth, some in the 20% range in terms of revenue growth. That's pretty remarkable. And we've got negative real interest rates. So, is a traditional multiple where you want to be focused? No. Is 20 to 25 reasonable? We think so, because they're growing sales so fast that they can generate decent returns without having multiple expansions. So we're not buying growth at any price. We're buying growth at a reasonable price, and we're picking away at the names when they get hit, like a Salesforce.
All right. Great analysis. Kevin Simpson, Rebecca Walser, great to see you both. Thanks very much for being here. Nancy, you're sticking with us all morning. We're happy about that. Thank you, everybody. Have a great Wednesday. Much more ahead this morning.